Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, April 12th, 2019 DecisionPoint show with your hosts, Carl and Aaron Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, of course, welcome back. All right. Dad, how's it going today?
Not bad.
Not bad?
Present accounted for.
Yep. Excellent. All right. Well, I know we have a ton to cover, so we can dispense with all the chit chat. All right. We're going to look at broad market indexes today and the price relative with the S&P 500. We will be doing the weekly review and a look at the scoreboard indexes. Of course, we're going to cover the DP indicators, and then Carl is going to cover the big four: dollar, gold, oil, and bonds. And then for our bonus, we're going to look a little more closely at what's going on with the ITBM and ITVM. And then we're going to look at the bullish percent index of the broad markets. We have a pretty interesting chart there for sure. And then we're going to look at percent of stocks above their 250 and 20-day EMAs. And we're going to do that for quite a few indexes. And I think you'll find that very interesting. All right, let's get started. We'll look at the DecisionPoint scoreboards and see what's going on with them. This week, there were no changes. I was watching closely, though. We were coming very close to some PMO sell signals. But with today's action and with, honestly, the rally we've seen in the last few days, the PMOs kind of made their statement, turned back around, and we weren't looking at seeing any sell signals this week. So currently, everything remains the same. And for the DecisionPoint sector scoreboard, we're looking at the intermediate term trend model signals and long-term trend model signals. The intermediate trend model, if we're on a buy signal, that means the 20-day EMA is above the 50-day EMA. So right now we're seeing a nice rising trend in the intermediate term for all of the S&P sectors. Really, the only laggards right now that we're waiting on are these long-term trend model sell signals. Long-term trend model, if you're on a buy, 50-day EMA is above the 200-day EMA. So we're still waiting for the 50-day EMAs to cross above those 200 EMAs on XLE and XLF. They are the laggards currently.
They're close.
They're very close. In fact, we could actually take a peek at those at the end if we have time.
Yeah,
I actually did go back right before the show and just make sure because they were that close. All righty, let's go ahead and let's look at a few stocks for you and some great charts, I should say. All right, I'm going to start with the broad market indexes. So these are the price charts. There are a few things I wanted to point out I think are very interesting. Number one, as you might notice, the S&P 500 equal weight ETF has made new all-time highs now. And you can also see that mid-caps are traveling. We're in a rising trend here. We're getting rising tops going on. And currently, you're seeing the S&P 400 behind that.
SPY has made new all-time highs today, too.
Oh, that's true. You can't, I didn't write it. I didn't get that vertical or that horizontal in there, but that is true. Thanks for the reminder.
The high is exceeded the ones back in September, and of course, the closing for today is higher. So,
yep. And yes, and then we saw the S&P 500 equal weight move higher. So when personally, when I start seeing the equal weight starting to do well and a bit better than the S&P 500, that tells me that we're getting broad participation. We're not just looking at those indexes that pretty much dominate ETFs, the cap-weighted ETFs and indexes. So I think that seeing the equal weight doing making these new all-time highs, and of course, really seeing the SPY log a new all-time high, I think is positive. But there are a few things under the hood that are still bothersome to me. Right now, you do see the mid caps. The Dow is also showing these rising tops. We're not quite to all-time highs on any of these indexes, but The one that is not following along with the play right now is the S&P 600. We're still not seeing quite the participation that we want to see. Now you can see we did quite well here off of that December low, but we're just not seeing the kind of participation we need from the small caps. I think that that's pretty much an ingredient you really need to have if you're going to sustain a strong bull market rally. All right. Now, I think that the relative chart after this chart is really interesting to look at now as well, because you just saw how the price charts are reacting. So this is the S&P 500. This is the SPX up here. And as you can see, we don't have an all-time high yet. We haven't even quite challenged it. Interesting facts about price relative. We can see that technology is certainly outperforming, and I think they've, the technology stocks are really sustaining a lot of this rally. Consumer discretionary happens to be doing very well too. But what you can see right here is with the 400, but particularly with the S&P 600, we did break out, and I put that in air quotes, we did break out from that declining trend on the S&P 600. But as you can see, it was more of a drift out of that declining trend. So we're getting really flat. We're not seeing outperformance by the small caps, but we're really not seeing completely underperforming. They're just not keeping up right now with the large caps.
Well, when relative strength moves sideways, it means the two indexes being compared are equal.
Right. Okay. Global markets, just a quick peek at those charts. We've been watching to see who's in a bear market and who isn't. And you can see we're finally starting to see some of these countries coming out of their bear market. Technically, I know when you look at the NYSE chart, because we've shown that before, haven't we, Dad? But, off of this top, most of the globe was not participating, and they never managed to get back above, like we saw in the SPY and the S&P 500, many of those indexes, the US indexes. So we're still watching declining trends. Finally starting to see Germany move on out of that. And certainly they've all had lows in December, and they have been rallying off of them. But really, we're not quite out of the woods yet. Technically. France is still in a bear market setup because we haven't come up above that declining tops trend. We're seeing the same. Japan, UK, India kind of fighting against that overhead resistance right now, technically above the declining trend tops line. And then you can see China really not wasn't affected quite so much. I would say the biggest difference here would be those tops back in the summer of 2018. China was really not, you didn't see that rally in July coming up like we did here for the US markets. That was a bit of a difference for China, but they've been participating well. They got out of the declining trend of their bear market. So just something to mention. All right, so let's go through. I'm going to look very quickly at our scoreboard indexes, and then we'll move right along. What you're going to notice on a lot of these, and I actually could redraw this into a rising wedge. I've been seeing a lot of those bearish rising wedges, something to keep an eye on. Here's where I was talking about just ready. I had my fingers on the button to log that PMO sell signal that I expected to come in today. And of course, with the big rally, Disney, JP Morgan, propping up the Dow in a major way with the rally feeding it. We did not get that sell signal. So we're still looking okay there. The Dow weekly chart, again, not much to say here. We did bounce off of what was the previous rising trend. We're getting that bounce. We're trying to head up, of course, to all-time highs. Main thing, we're on a buy signal. And you're really not seeing anything in the way of deceleration just yet from that intermediate term PMO. NASDAQ, of course, technology has been really doing well, taking off, but it still hasn't logged all-time highs yet. Certainly outperforming the S&P 500, but we're just not quite there yet. PMO buy signal, we had a little bit of a whipsaw there at the end of March that I had mentioned. Look at the OBV, though, really supporting this move to the upside. weekly chart for the NASDAQ 100. You can see we are getting ready to challenge those all-time highs, still on the buy signal, no deceleration. OEX, if I can get my button to work here. Okay, S&P 100, again, rising wedge, currently on a buy signal, really flat though. Mainly when you see flat, that means acceleration overall has been pretty steady. Right now, though, I'm watching that rising wedge. And for the weekly OEX chart, again, not much here. We're just trying to get to those all-time highs. Still have the buy signal, not seeing any deceleration. All right, S&P 500, the chart. So you could see the bearish ascending wedge. I actually had been looking for a possible test of this rising bottoms trend line at the bottom of the wedge, but of course, you know, best laid plans. We ended up getting a nice gap up today in the rally. And honestly, the volume has been looking very good with the OBV. We got the breakout here. We're making highs for the year. All of the volume it's looking pretty good here. But it is a bearish pattern. We haven't quite made it to the all-time highs. This is going to be a really difficult area of overhead resistance, in my opinion. So we'll have to keep an eye out for that, a possible decline. But right now it is looking pretty healthy, especially on the weekly chart. Again, no deceleration. The comment I would have on this chart is when you look at the rising bottoms trend line here, this rising trend off of the December low, this is extremely steep on the S&P 500. It's very hard to maintain a near, you know, nearly vertical rally. So we're getting close to those all-time highs. It just makes sense to start looking for at least a struggle here at that at the all-time high, possibly a pullback. But I just don't see this rising bottoms, this rising trend able to sustain too much longer, especially with resistance coming. Carl and I talked about this chart, the climactic indicators. It seems to be a pretty clear buying exhaustion going on here. We had climactic readings on the new highs and the advances minus declines, and including the volume, advanced declining volume. And now we're getting ready to poke right up here. We're testing the top of that Bollinger Band for the VIX on the inverted scale. You get extremely low readings on the VIX. Generally, you should start thinking about a reversal to the downside when they're when we see that VIX get especially low. And then you pair that with, you combine that with these climactic readings, positive readings, and you look at what's been happening the past few days, and we've had a rally. To me, this is a buying exhaustion, and start to look for a pullback here, just at least a pause over the next day or two. I'm looking for lower prices going into the week, though. Alrighty, short-term indicators. Right now we have a confirmation as far as the the STOV, the volume part of the indicator. We do have a little bit of a negative divergence here with declining tops on the STOB. But I like to see the volume going with price. That's, I think, the most important. What I did want to note, and what I have been looking at, are divergences between the actual indicators. I'm still not really sure what, I'm still studying it, because this is the first year I've really noticed us really having any. I tried to go back in time, and I just didn't see as many as I have, I mean, very clear ones anyway this year. So I'm watching them closely. We'll see if they are, you know, super meaningful. At this point, I look at it as an attention flag, not necessarily one way or the other as far as bullish or bearish. I'm still evaluating. All right, intermediate term indicators. You know, we don't have a top yet, but as you can see, currently we're looking at declining tops with, like I said, the second top not quite in, but I would suspect we will see one. Sorry about that. I would expect that we will see one. These are really extended readings, out of the ordinary, climactic, given what was going on at the time. So I'm not really looking for them to really challenge much these previous tops, but they are rising right now. And I think that is positive for the intermediate term, but they are very overbought. So caution. To me, I'm reading caution. All right, let's go ahead, and I'm going to pass it over to you, Dad, to do the big four and do some of that bonus.
Okay, we got the dollar in a rising wedge formation, and PMO just crossed over today, I believe, downside. So I think it probably will go lower. Let's take a look at the weekly.
Mm-hmm.
All right, again, the rising wedge, a very steady up move based on the PMO running flat for quite a while, really. And but to see the trading range, we're near the top of that trading range, and I will just assume on a technical basis it's not going to get out of that range. That it'll probably head back down at some point after it hits the top or before.
All righty. Yeah, it looks like a intermediate term PMO sell whipsaw, of course.
Yeah,
Did come in.
When it's flat like that, I don't pay much attention to them, you know.
No, exactly. It's sort of like, to me, those drifts out of rising trends and declining tops. All right, gold.
Okay, I mentioned last week, head and shoulders forming. It's getting a little complex on the right side at this point, but I'm
viable.
The PMO is negative at this point, and let's take a look at the. By the way, I hate head and shoulders patterns.
We were talking about that at the beginning.
Distract you. Gold, okay, weekly. So we had a pennant formation form, which that's bullish. The weekly PMO is turned down, which is bearish, but we still, that price pattern, you know, he could redeem it, this pullback.
And then we can get rid of that head and shoulders. All right, USO.
Broken out of the rising wedge pattern, and the daily PMO is very overbought. So watch out for that. And I think I went back about 10 years on that. So it is at top of its normal range. Let's take a look at the weekly. See, we had that rising, very narrow. I was sure it was going to break down, but it broke out up. So looking positive in this time frame.
Yeah.
I have another chart there with crude on it. Yeah. And looking at the top of the range for crude is about $76, and I don't disagree that it could get up to there. I think it easily could. Going much higher than that, I sort of have my doubts. But they've got a good, strong PMO.
Oh yeah. Alrighty, TLT.
Okay, Wednesday this week, there was a report that about half the Fed governors think we may be able to raise interest rates later this year. And we already had a down move from the peak in March. But as soon as that news came out, we did a gap down on Friday, which basically gives us an island reversal. It's a little odd looking. Usually you don't have, it's all usually in one grouping, but it's still valid as far as I'm concerned. The weekly PMO has turned down. I'm sorry, that's the daily PMO. Let's
Yes.
take a look at the weekly. Incident, I don't know. I did some research today. I don't know if there's any downside target on reversal. So
yeah. I'm not familiar with any. I just always look at the gaps themselves, and then it got filled. Yeah.
But so on the weekly chart, you see where bonds have broken out of a long trading range there, but it fell back down into the range this week. So, and the PMO looks like it hasn't topped, but it's going to, as long as price continues down.
Mm-hmm.
So I'd say the Fed's, less bullish attitude, or I should say less, what do you call it? They're hawkish or dovish.
Mm-hmm.
They're not quite as dovish as they were.
Yep, so, I definitely think that's part of our problem.
Okay, here's a chart that I look at pretty regularly, and I've got two extra panels on the bottom, which are the, you have to scroll down one more.
Oh, sorry.
You've got the long-term trend model at the very bottom, and then the intermediate term trend model just above it. And the IT trend model is actually higher than it was back in when the market made all-time highs in September. The long-term trend model I got to looking at it, and it hit, I don't know how high that is relative to other highs historically, but it was definitely up in the top of its range in September, October. And at this point, here's the market making new all-time highs again, and it's way below its previous peak. So that's kind of one more thing that gives me pause about the market continuing higher. Mm-hmm. Let's take a look at the next one.
All righty.
Okay, here's this is the bullish percent index for three major indexes here, and that's the percentage of bulls. Percentage of point and figure buy signals in a particular index. Now notice that the BPI for the SP 500 is almost up to where it was back at the beginning of 2018. And you notice that at the end of 2018, the high that it made there, actually October, when the market was making new time, the BPI was way below its previous top. So we're in a situation on the NASDAQ composite and New York Stock Exchange composite where the BPI is not up to where it was back at the beginning of 2018, and is we could say it's not quite as bad as the divergence that we had before, but it's way below what it ought to be making when the market's making new highs. Mm-hmm. Okay, the next series of charts really is just to highlight the fact that these, in the DecisionPoint chart packs, we have a group of we have different groups of charts for all the indexes. In this particular one, we've got stocks above their 250 and 20 EMA, and for several major indexes. And just as we scroll through, you'll notice that I'm sorry, scroll. It's click through. If we click through, you'll notice that the NSE is at 60, above 200. It's 60%. Here on NASDAQ, it's at 50%. And without going into let's take a look at the rest of the indexes. So S&P is what, 76 or 75, I should say. And let's see the next. I think we've got some, the mid caps. They're at 60, 64. And then again, the small caps, and they're really only at 52. So
definitely a difference.
Right.
And I know that's, again, that was one of the things we've been talking about is we're not getting that outperformance we want to see out of the small caps against the S&P 500. I mean, that usually will fire things up. Right now, it's we're just not seeing that kind of participation.
Right. Yeah. And can you put up a chart of the S&P 500 with volume? 1 year is fine.
Mine's right, yeah.
Okay. You notice that. Let's see what EMA do you keep on there?
I think I have a 50. Let me double check that. It's one of those things I just always have. 50, yeah.
Yeah, I use a 250, but it still illustrates it very well. You notice how the last 3 weeks, the volume most of the days has been really, I checked it, it's around 20 to 25% lower than the moving average. So it's been very thin considering we're moving into new highs. I see at least we did make equal the average today, but I don't know what it's going to look like with the 250. But that's just something that keep an eye on. And I should say, I don't know of anywhere else you can get volume. I started collecting it, counting, the individual stocks, adding them up back when with DecisionPoint, and I passed that along to StockCharts when they acquired the DecisionPoint. So not many places you can see S&P 500 volume.
That's true. All righty. So, what are you looking at for going into next week? We have about 30 seconds.
I'm not really excited about what I'm seeing. It's too. I'll probably expand on that idea in my blog this evening. But no, I'm not looking forward to anything good beyond this point. I think we climaxed and we've hit overhead resistance.
Yep. All right. Yep. Should be interesting. I know based on that, just the ultra short term, the climactic indicators, I'm certainly looking for lower prices going into the week. But anyway, I want to thank everybody for being with us today. Please remember to complete the survey as you exit. We love to get your feedback and hear what you think of the DecisionPoint show. And as a quick reminder, we are on Fridays, 4:30 p.m. Eastern. Have a great weekend, everyone. Happy trading.